Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 25th of February 2024. And yesterday we published our regular gold and silver market weekly update. Now this is a repeat of that video under a different headline and thumbnail. What we did notice, however, last week was that gold and silver prices varied. Gold went up, silver went down. The question is, with the inflation data due out later this week, what's going to happen? Let's take a look. Okay, first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not, as yet, joined that channel. Now let's take a look at precious metals and markets. Gold rose $22, rising from 2013 to $2,035 an ounce, having hit a high of 2,041 and a low of 2013, a rise of 1.1%. In our last update, we predicted that gold would trade between 1975 and 2065, which it comfortably achieved. Gold spread between high and low was a meager $28, but we did point out last week that there was not much economic data likely to move markets, and forever was thus. In sterling terms, gold finished the week up £8 at £1,607, and in euros it was up €12 at €1,881. Silver, though, fell 47 cents, falling from $23.42 to $22.95, having hit a high of $23.53 and a low of $22.58, a fall of 2%. Now, last weekend we forecast silver would move between $22.25 and $24.25, and once again it did this comfortably within the range. Like gold, the difference between its high and low was relatively small, just 95 cents. In sterling terms, silver was down 46 pence at £18.14. Remember, we won't buy silver until it gets down to £15, though we're not totally convinced it will achieve that level. And in euros, it closed at 21.25 euros. That's down just over half a euro. The gold to silver ratio rose as a result of this from 86 to 1 to 88.7 to 1. Now, Bitcoin stands at $51,560. That's down just $240 on the week. US equities were higher this past week. Dow Jones up 504 points at 39,131. The S&P up 83 at 5,088. And the Nasdaq Composite up 221 at 15,996. The FTSE Index was down just 5 points at 7,706. So again, equities reaching for these all-time highs in the United States. Oils were down a little. Brent crude closed down $1.85 at 81.62. Remember, we want to see it in the early 70s. And WTI crude closed at 76.49, down $2.70. The dollar index stands at 103.93. That's down 0.34 points on the week. Now, we mentioned last week to look at the Fed minutes and listen to what the various Fed officials were saying. Well, frankly, the gold market was significantly shaped by the Federal Reserve's cautious approach to interest rate cuts. Federal Reserve speakers, including Fed Governor Christopher Waller and Fed Governor Lisa Cook, emphasized the need for more evidence of cooling inflation before considering rate reductions. US Treasury yields were mostly lower last week, reflecting investor uncertainty about the future of interest rates. The US dollar index, after a 2-month rally, though, posted its first weekly fall in 2024. In the upcoming week, though, the gold market is likely to be influenced by key economic reports, most notably the Personal Consumption Expenditures, or the PCE data, which is a reflection of inflation. Remember, the other reflection is CPI. Now, this is due on Thursday, the 29th of February. This report could provide critical insights into inflation trends and consumer spending, potentially shaping the Fed's policy decisions. The market is expecting the year-over-year PCE rate to fall from 2.6% to 2.4%, and the core PCE rate year-over-year to fall from 2.9% to 2.8%. But the previous CPI data, which was reported just less than 2 weeks ago, was disappointing, and we shall have to see if the PCE data reflects similarly. Now on Friday we have manufacturing PMIs and other Fed governors and presidents speaking at the end of the week. Now what proved interesting is that in spite of the Fed's hawkish comments, gold still managed to rise, with most analysts now beginning to come to the opinion that there will be no rate decrease until June, and gold nevertheless is holding up quite well. This really suggests that when we become certain of an interest rate decline, we truly could see gold take off, back over all-time highs again. There is no doubt that tensions in the Middle East are also adding a premium to the price of gold, as investors tend to move to safe haven assets during such times. Now silver pulled back this week, but again is broadly range-bound, 22 roughly to 23.50. Seems to be the range for the moment. A break above 23.50 will lead to 24.50 being the next level of resistance, and a decline below $22, should this be achieved, will really cause silver to fall to 21 before significant support is again achieved. Of course, there are incremental support levels between 22 and 21, but 21 is where the strongest support level lies. Now, the prevailing economic conditions marked by ongoing inflation concerns and a hesitant Fed are creating challenging conditions for silver. The combination of a firm dollar and increasing treasury yields is placing downward pressure on silver prices. So this week, consumer confidence figures due Tuesday, PCE figures due Thursday, and manufacturing PMIs on Friday, with a few Fed official comments, should be where our focus lies. So with this in mind, and taking into account a continuation but not escalation of geopolitical tensions, our forecast for gold therefore is a trading range between 1985 and 2085, with 1950 to 2100 as outliers. For silver, we see a spread between $22 and $24, with $21.50 and $24.50 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter, and have a great, safe, enjoyable weekend. And as we say each week, a prosperous week ahead.